to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Joe Praveen, Research Manager with Mobility at Frost & Sullivan. Joe, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me on your show, Jill.
All right, and one of the biggest issues that we're facing, particularly over the holiday season, is the chip shortage. What is the current situation of the chip crisis?
So we at Frost & Sullivan have been tracking this issue right from the beginning, and for us, this is an ongoing crisis. We see that OEMs are still feeling the heat. This can be deciphered from the disruptions that they are facing to their production in the recent months. For example, Volkswagen had to briefly pause their production in the month of November in 2 plants in Germany. Toyota had to cut down their production plans for November by 15%, and Nissan had to cut their production plans for the months of October and November by 30%. When you look at the US-based OEMs, Ford and GM, we know that they faced setbacks as well in the months of September and October. So there is a lot of pain in the system, definitely. But what we are seeing is that OEMs who were caught unawares towards the end of last year have found ways to work around this crisis and keep their production going.
So, Joe, how have the various OEMs reacted?
So different OEMs have adopted different strategies. We can highlight a few. For example, most OEMs have tried to cut down on the convenient features that they offer in their vehicles, which are directly tied to semiconductor chips. Your features like seat heating, infotainment, touch screens, power mirrors, and a whole host of other connected car features have been tapered down or paused for the moment. And when you look at developing markets like India, for example, what OEMs have done is that they are focused on producing the lower end variants of their vehicle models, which traditionally did not have many convenient features anyways, which were tied to semiconductor chips. So we're also observing that consumers in these markets are more than happy to buy these lower end variants instead of waiting for a long time in a queue for the higher end variants to become available in the market. Now, if you look at developed markets, some OEMs have focused on their most lucrative and profitable models, even though those could be the most expensive offerings from them. One example is Daimler. So they focused on their higher end variants like the S-Class and Maybach. And if you look at their Q3 numbers, you would notice that their production has fallen year on year. Their unit sales has fallen by 25% year on year, but their profit has grown by 18% year on year. So that strategy has worked for Daimler. Apart from that, we're also seeing companies trying to build in-house capabilities. Geely, for example, has announced that as part of their strategy 2025, they would start developing 7nm chips in-house starting from 2022. Similarly, Ford has partnered with global foundries to ensure that there is adequate supply of chips in the short and long term. GM, we've been noticing that GM has collaborated with at least 7 different chip manufacturers, including Qualcomm and NXP, to develop microcontrollers of the future. Now, one company, one OEM that has stood out through this crisis and kept their production at optimal capacity has been Tesla. So they've adopted the strategy of sourcing alternative chips. They've had this in-house capability to write firmware for these alternative chips, integrate them into their vehicles, test their vehicles in double quick time, and get them production ready. So that ensured that their production was not disrupted to a great extent, and it was at optimal levels. So these are some of the strategies that OEMs have adopted to navigate through these crises.
Right, and these are short-term fixes. So, Joe, my question to you is, what should be the longer-term strategies for OEMs going forward?
Absolutely. So, I mean, the long-term strategy should be to make their supply chain more resilient, more sustainable, and transparent. So, making the supply chain more transparent will ensure that there is seamless flow of information and data between the OEMs and the suppliers. So, one way of doing this is to adopt, to digitize their manufacturing process, to adopt technologies like cloud and data analytics, similar to what Volkswagen has recently done. So, they've developed this industrial cloud, which connects almost 120 of their manufacturing plants, which are spread across the globe, to this cloud. Now, in the future, this cloud will also be connected to their suppliers, which means there will be seamless flow of information as to what the production plan is, if there are any changes to the production plan, what is required, when it is required, and how much of it is required, all in real time. So that will make the supply chain more effective, as well as more transparent. When you speak of resiliency, we've seen this push from governments as well to regionalize the supply chain of OEMs to mitigate the risks associated with your logistic disruptions, as well as the uncertainties arising out of geopolitical crisis. If you look at sustainability, one way of achieving that is to focus on circular economy concepts like recycling and remanufacturing, which will not only make the supply chain more sustainable, but also more greener. Apart from this, we're also seeing a trend where OEMs are collaborating more and more with these chip makers. So you will see more investments from OEMs in semiconductor companies. You will also see them collaborating with these chip companies to co-develop chips for the future.
Right. So, Joe, it kind of sounds like digitizing the industry, just like every other industry that's being digitized. It sounds like this shortage actually accelerated these trends that were going to happen in the next 5-10 years anyway. So it's interesting to see how, this acceleration is taking place. So in the last minute here, if you have a crystal ball, when do you think this crisis is going to end?
That's a good question. Now, we need to look at the genesis of this problem, and the root cause of this problem was that supply was not able to meet demand. Now, the chip companies are aware of this problem, and they are trying to increase their capacity. Now, they have started, almost all chip companies have started setting up new plants to manufacture additional chips to meet the demand. For example, Intel has set up is setting up 2 plants in the US. TSMC is setting up new plants in the US, Japan, and Taiwan. So the plan is in motion to increase the capacity of chips to meet the demand. Now, the issue is setting up a chip fabrication plant takes up at least 2 years. Now, that's why we feel that this crisis will go deep into 2022 till the time these new plants actually start producing chips. And once that happens, probably towards the end of 2022 and early 2023, is when you will see the pressure easing on the system, and supply slowly starting to meet the demand. Again, this is the best case scenario. Now, if there are further lockdowns because of the ongoing pandemic, that will affect the expansion plans of these chip makers, and it will only drag this crisis even longer.
All right, Joe, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.